Imagine waking up every morning without worrying about your job, your bills, or how to make ends meet. Picture having $85,000 flowing into your bank account every single year without lifting a finger. For most people, this sounds like a dream, a luxury reserved for the ultra-wealthy. The idea of financial freedom, where your investments do all the heavy lifting while you enjoy life, seems unattainable to many. But what if I told you that this dream is achievable and doesn't require winning the lottery or inheriting a fortune? What if there was a straightforward, practical path to making it happen? This video will uncover the exact amount of money you need to have invested to generate $85,000 annually. And let me warn you, it's probably not as much as you think. Stick around, because we're going to break down the numbers, share some jaw-dropping insights, and reveal investment strategies that can make this goal a reality. Whether you're just starting your financial journey or already building wealth, the strategies we'll discuss can provide clarity and motivation to supercharge your financial plans. Let's dive into the details and debunk some common myths about creating passive income. The key to passive income. Before diving into the numbers, let's clarify one thing. $85,000 per year is passive income. Passive income means your money works for you, not the other way around. Unlike a traditional job where you trade time for money, passive income keeps rolling in whether you're working, sleeping, or sipping cocktails on a beach. It's the ultimate financial goal for anyone seeking freedom. Freedom from the constraints of a paycheck, freedom to spend your time as you choose, and freedom to pursue passions without financial stress. But here's the kicker: passive income doesn't come for free. It requires one crucial ingredient: invested capital. This isn't money you stumble upon. It's money you intentionally save, grow, and allocate over time. The question is, how much capital do you need to generate $85,000 per year? The answer depends on three critical factors. Your chosen investment vehicle. Are you investing in stocks, real estate, bonds, or something else entirely? The type of investment determines your potential returns. The return on investment, ROI. The higher the ROI, the less capital you'll need up front to achieve your goal. Tax implications. Taxes can take a significant bite out of your income, so minimizing their impact is essential to maximize passive income. We'll explore these factors in detail and give you a roadmap to achieve your goal. By the end of this video, you'll have a clear understanding of what it takes to make $85,000 annually without relying on a paycheck. Understanding the 4% rule. Let's start with one of the most popular rules in financial planning, the 4% rule. This rule states that you can withdraw 4% of your investment portfolio annually without depleting the principal over time. It's often used as a guideline for retirees to determine how much money they need to save to maintain a stable income throughout retirement. Here's the math. To earn $85,000 per year, divide $85,000 by 4%. $85,000 slash 0.04 equals $2,125,000. That means you need $2.125 million invested to generate $85,000 per year, assuming a 4% withdrawal rate. While this number may seem intimidating, it's important to note that the 4% rule is a conservative guideline. It's designed to account for market fluctuations, inflation, and the need for your money to last several decades. Sounds like a lot, right? Don't panic, this is just one approach, and there are ways to reduce the required capital by choosing higher yield investments or leveraging alternative strategies. It's also worth noting that the 4% rule assumes a balanced portfolio of stocks and bonds, which may not be the best option for everyone. Let's keep going and explore other methods that could significantly lower the amount of capital required. Alternative investment strategies. While the 4% rule is conservative and works well for traditional stock and bond portfolios, there are other ways to achieve $85,000 in passive income with less upfront capital. These methods often involve taking on slightly more risk or exploring non-traditional investment vehicles. Let's dive into a few strategies that could change the game for you. 1. Dividend stocks. Dividend-paying stocks can provide a steady income stream, often with higher yields than a typical index fund. Dividends are payments companies make to shareholders, typically from their profits, and they can be an excellent source of passive income. Let's say you invest in a portfolio with an average dividend yield of 5%. $85,000/0.05 equals $1,700,000. With dividend stocks yielding 5%, you only need $1.7 million to achieve your goal, significantly less than the $2.125 million required by the 4% rule. Dividend stocks offer the dual benefit of income and potential capital appreciation, making them a popular choice for income-focused investors. But here's where it gets interesting. Some individual dividend stocks or funds offer yields of 6%, 7%, or even higher. For example, at a 6% yield, you need just $1,416,667. At a 7% yield, you'd need only $1,214,286. Higher yields mean less capital is required, but remember that higher yields often come with higher risk. Companies with exceptionally high dividends may face financial instability or declining share prices, so always do your homework before chasing high yields. Diversification within your dividend portfolio is crucial to mitigate risk and maintain stable income. 2. Real estate investments. Real estate is another powerful way to generate passive income. The beauty of real estate lies in its ability to produce consistent cash flow while also appreciating value over time. Here's how it can work. Suppose you buy rental properties that yield a net return of 8% after expenses. $85,000/0.08 equals $1,062,500. With real estate, you could potentially achieve your $85,000 goal with just over $1 million invested. Rental income can be incredibly reliable if you choose properties in high-demand areas and manage them effectively. But wait, it gets better. Unlike stocks, real estate allows you to use leverage. For example, with a 20% down payment on rental properties, you could control $1 million worth of real estate with just $200,000 of your own money. This significantly lowers the upfront capital needed to generate passive income. Over time, as tenants pay down your mortgage, your equity in the property grows and your cash flow increases. Of course, real estate isn't without its challenges. Property management, maintenance, and tenant issues can require time and effort. However, many investors find these challenges manageable and well worth the rewards. Additionally, working with property management companies can make real estate investing more hands-off while still reaping the benefits of steady income and long-term appreciation. 3. High-yield bonds or REITs. For investors who prefer a more hands-off approach, high-yield bonds or real estate investment trusts, REITs, can be excellent options. High-yield bonds often offer returns of 6 to 8%. Some REITs yield 5 to 7%, and the best ones provide consistent payouts with the added benefit of property appreciation. Using these instruments, the capital required to generate $85,000 could range from $1,062,500 at 8% to $1,700,000 at 5%. Tax efficiency matters. Here's something many people overlook: taxes. Passive income isn't always tax-free. Dividends, rental income, and capital gains often face different tax treatments depending on where you live and how you structure your investments. Conclusion. So, how much money do you need to earn $85,000 per year? It depends. With a traditional 4% withdrawal rate, you'd need $2.125 million. But with higher yield investments like dividend stocks, real estate, or REITs, you could achieve your goal with as little as $1 million, or even less if you leverage your assets wisely. The key is to start today. Whether you're investing in stocks, real estate, or other vehicles, every dollar you invest brings you closer to financial independence. Remember, the path to $85,000 in passive income isn't about luck or shortcuts. It's about strategy, discipline, and making your money work harder than you do.